Good afternoon, everybody. Thanks for coming back after your lunch. Sorry, as you know, we have to do this these days, so it's just what it is, I'm afraid. But delighted to all see you and welcome back to the GSMA's first ever FinTech Summit. And in this session, the fourth session of the day, we're going to focus on what we're calling FinTech disruption. So this will be case studies of solutions that have been deployed in market, real case studies, not hypotheses. My name is Brian Gorman. I'm the Financial Services Vertical Lead from the GSMA. On behalf of all my colleagues at the GSMA, warm welcome to you this afternoon, and a big thanks to our sponsors, Citi, and also Accenture, for their support in helping us create the whole proposition this week. Delighted to say we've got some fantastic speakers today, right across the world, so some really good geographical distribution of propositions. So once I sit down and be quiet, George will then take over and do a presentation on his case study with Alpha Bank. Sutoyo will then talk about the work that he's been doing with M-Pesa in Africa, and then Praneet also on his credit risk scoring solution with Yabex. So we'll have 3 presentations, 3 case studies, and then our goal is to still have some time left for the colleagues to take some questions. But we're delighted that they could join us today. Just one plug, if I may. Today's session and the work we've been doing as a FinTech as a theme in Barcelona is because our members are saying it's a really important area, we must give it much more focus. So at the end of the month, 31st of March, we kick off our new FinTech Forum. Today's structure of the day, the 5 sessions, very much reflect what's on the screen now. This is the feedback we get on the areas of focus that our colleagues are keen to explore. So first up, I'd like to introduce George Held from Vion in Russia. George, you're most welcome. Thank you for joining us.
My mic is actually already working, so trying to make it really interesting and exciting. So who we are and why we're here. Obviously, as old telco companies, we all think that we know how to do fintech, and with the exception probably for Safaricom, everybody else failed. So we thought, let us concentrate on something which we know, and let's professionals deal with the financial services. That's why what we're doing is we're not doing even fintech, we're doing tech fin. What we bring into the story is a knowledge about our customers, and actually entire proposition which we developed together was about doing something absolutely controversial, something which nobody has done before. Look at the details of our customers and based on this one, create a unique proposition. So what we have done, we went to the bigger bank, actually the biggest commercial bank in the country, and we thought, okay, let's merge our databases so we know a lot about the customers. Let's also score entire customer base. And for example, in the country which I'm referring to, we proudly service around 60 million customers. So score all 60 million customers and understand what they really need. And based on this one, create a products, all full portfolio of products, and also look at the customer journey to make it really simple, make it really efficient. I'm going to go and show you some numbers, but kind of as a spoiler, right now we issue 4 credit instruments every minute in the country. It's a lot. We're actually the biggest bank right now in the country in terms of issuing of the cards. We issue credit card. We're not talking about debit or virtual card. We issue fully blown debit card every 20 seconds. So it's a huge amount of processing power behind it. And how to do this? It's a little approach which we took. It's a little different. We put teams from 2 organizations, put them together in one separate building, and we actually create what kind of fully digital environment. And actually even the team itself, it's not called Beeline or Alpha Bank. It's actually it's a joined together is into one organization. And in this team, what we're doing, we're creating lots of digital sprints, optimizing processes, making sure everything is unblocked and brought together in the really effective operation. And this is actually the challenge itself, how to take 2 big operating companies in one country and actually to work together. But I'm sure we'll spend time on this one because though it's something under the hood, it's not really exciting. Obviously, we created full portfolio of services, debit, credit, virtual, post-credit, all of those normal things which everybody creates in their own markets. And because we're using lots of data analytics, we decided to create a product which is going to magically appear at the right point of time to the right customer in the right format. So by doing this, we were thinking of building the world without all this informational pollution, the world which actually dances around the customer and magically appears. Because all of us in a developed markets, we get a whole bunch of offers from different financial institutions. We're offering you a credit line. In the emerging markets, we get lots of information about some other products which are not relevant to you. So the idea was to combine the data, use the data, and based on this, offer a product in the right time to the right customer with a really elegant user experience. Probably one item which is very important here, to enable all of this, we really focus on data analytics, and every second we're doing 86 data exchange transactions between us and the banks. So last month alone, we did 180 million data transactions just to make sure that we're really elegantly meeting customer needs. And to do this, we have an army, and I'm actually using the word army, of data scientists who are sitting and doing nothing but creating different mathematical models. One of the groups is kind of affinity models, where we understand what the customer is, we understand how to do a scoring, we understand how to properly prepare this product. So we understand, yes, for this customer, we can give financial instruments, and we understand the risks behind it. What's also very interesting, we're not using banking data, we're not using credit bureau, we're using only telco data or data which we enrich through all the different elements. And of course, we're spending lots of time creating lookalike models, some different analytical tools, self-learning instruments, which creates this part. And usually this is where all telco stops, because you think, great, now we know that we can give money to this guy. The challenge is there that, sure, lots of people qualify for this one, but do we really want this instrument? So, and this is actually, it's a very interesting model, because initially, when we brought the product to the market, we were starting to offer the service to everybody who qualified, but people don't need it. And the people don't need it because of very simple principles. On one side, we have a full customer base whom we divided in what we call 10 buckets. The higher your bucket, higher probability is that you're going to receive the credit. So probably all of us here in the room is going to be on the top on the credit risk 1 and 0, because definitely those are the people whom banks want to give the credit. The challenge is we probably don't want the credits. And this is a very different model, and this is where the propensity model is starting to play. Because sure, you have credit, you have capability to receive credit, you don't need it. So what's the purpose of communicating to you? So we put a different kind of layer of combining all this stuff together. So in reality, what's happened is we look propensity model, we look at credit scoring risk, and we identified people whom we can contact. And now even more elegant part, and this is all mathematical models, is how you want to be contacted. Because some people like to get a message on their telephone, but this message needs to come in the right moment of time. Some people prefer somebody to call them. But again, it's all about right moment of time. So this is actually a three-dimensional dilemma. One side is you need to be qualified to get a credit. Another side, you need to have propensity, you want the willingness to take, and all of this communication needs to come to you in the right point of time. Give you a couple of examples, real examples from real markets. People take credit a couple of days before their birthday. So we know where somebody's birthday is because obviously we have all their data, or we have a lookalike models, we have their friends, so they congratulate them. Or we know in other elements where people are taking a credit, where they had a car incident, and when they had a car incident and they don't have insurance, so people go in and take the credit. So you combine them, you find the people, and in the right point of time, during actual event after incident, you communicate to them. So there are lots of insights like this. People are give you a typical telecom example. People asking for a credit when they're doing renovation of apartment. As a telco, you know that people are doing apartment renovation because they go in a lot to the Home Depot type of store or home improvement store and they're buying stuff there. You score them, but now it's a moment where you need to communicate to them. So next time the guy entering Home Depot, you send a message to his mobile phone saying, by the way, are you aware that at this point of time we can give you a credit line which we can use for renovation? And all of this built together very elegant experience when you're addressing the service to the right people in the right point of time. And of course, we're putting lots of gimmicks around them. One of them is mobile ID. It's something which we, by the way, just 20 minutes ago won GSMA award. It's an ability to pre-fulfill the forms. So human experience. You're going online and you're looking to apply for credit application, and they're asking your passport number, your address, a scan of your passport, your visa, your work permit, all of this stuff. Actually, telcos, we do have all of this. So customer press the button, share the data, and all this information is sent to financial institution. It's all filled. This is how we make an issue of credit instruments really fast, very efficient, and really convenient. And probably the most important thing, the only reason why we're doing this is to create the world without informational pollution, the world which lives without you. And just to showcase to you what the user experience is with the service, we produce very real movie. It's actually a real scenario, what's happening to one of our customers. And
Hey, sweetie.
How are you?
So-so.
Are you coming?
I can't work it out. But
Have you forgotten about tomorrow?
how could I forget?
Are you gonna give me my helicopter?
Get the heliport ready, Captain.
Yay! Bye, Dad.
Dispatcher.
Requesting permission to land.
Mikey Force 1.
This is air traffic control speaking. Permission granted. I repeat, permission granted.
Thanks to Beeline technology, you can get approved and receive your loan in under 10 minutes using just your smartphone. Alpha Bank and Beeline. Don't wait to make your loved ones happy.
so in the real world, in the world of TechFin, the only value we as telecom have in reality is the data, knowledge about the customers, expertise and ability to process this data and effectively bring it to the market. Very often we're forgetting about this, but this is a true, only unique proposition. It's not distribution, it's not our brand, it's not the assets, not the base station, it's the data about the customers. And if you properly use it efficiently, we all together will build the world without informational pollution. This world which rotates around us and makes life better every day. Thank you.
A big thanks to George for sharing a fantastic case study. A brilliant use of data, really innovative proposition, really exciting. I'm glad that's gone so well for them. So moving on now, I'd like to invite Satoyo onto the stage to switch continents really and share another case study now from Africa. Satoyo, welcome.
Thank you. And George, that was very inspiring. For us, we're using a lot of what you just talked about, but I just want to start by what we do. We are a purpose-led company, and we believe in transforming lives. And that's what M-Pesa is all about. We believe in what we call the 3 Ps, which is purpose, people, and the profits generally will follow. So that becomes the ethos of what we do. And I want to just give an example very close to what George just spoke about. There's this lady we met, and she's called Mama Lena in Kenya. And she took a loan through our products when we launched our loan facility. And she had a she got a $5 credit limit. And she woke up at 4 in the morning, went to the market, bought some groceries, and went to a construction site and started making breakfast. And she'd borrow and repay on a daily basis. Over a period of about 7 months, her credit limit had reached about $10 to $12. She got a friend into it. They were now in 2 sites, construction sites. Today, there are 6 women supporting 23 children, and they're fully independent with a credit limit combined of over $1,500. That's the power of what we do. It's about impacting society, and we believe that if the society is successful, then we will be successful. I just wanted, so my name is Sitoyo Lopokoit. I handle M-Pesa across the African footprint and also Kenya. Just wanted to, so next week M-Pesa turns 15 years old. And we were looking at it and saying, we launched before the iOS. We launched in March 2007. The iOS launched in September that year. And we've moved from a simple send money home proposition to the most sophisticated digital ecosystem anywhere globally. And I'll repeat that, anywhere globally. And the reason for that is in our 9 markets, over 40% of the GDP of those countries flow through the system. In Kenya, it's close to 70% of the GDP of the country that flows through the ecosystem. And this covers the government runs on M-Pesa, the businesses run on M-Pesa, the stock exchange runs on M-Pesa, the customers run on M-Pesa. And you know, even if you go to the US or China, none of those companies run a model that commands that kind of value that goes through the entire ecosystem. So that's the success of M-Pesa. But I think over the last 15 years, but there's actually even more that we can do. And George talked about the data. We talk about the development of technology. When I walk around, MWC this year, it's all about 5G and the applications above it. But those things need a payment system, and we're going to be there. And if the customer doesn't have the money, we will lend the money, given the data that's there. The youthful population, so we have 15 years next week. My son is 14 years old. He's a digital native of M-Pesa. It's not, financial inclusion is not what he's looking at. He wants to live his life. He wants to have Fortnite on M-Pesa app. He wants to have all his games. He wants to chat with his friends. He wants to live his life. He wants to go to the movies. He wants to be able to pay without necessarily, and making it very simple. So the future of what we see on mobile money is very exciting with the advent of technology, cloud architecture, blockchain, digital currencies. and then what we call the two-sided ecosystem. But just some stats. Last year, we pushed over $300 billion in M-Pesa. Customer-to-business payments exceed over $8.5 billion on a monthly basis, and we have over 18 million customers who would actually do what we call business payments. We have over 51 million 30-day active subscribers, and we average about 65 million transactions a day. Yesterday, I was reminded that that beats PayPal, Western Union, and MoneyGram combined. So it's a pretty impressive system in terms of that. But for us, this is an outcome. I think the purpose part is what is really important, and then these numbers come. I never look at M-Pesa numbers. I've approved a business case for millions of dollars, actually not a business case, a proposition for millions of dollars without ever looking at the business case. And this was our contextual overdraft dubbed Fullism. And when we launched this product, one of my teammates Googled and said, when was the first overdraft done in the world? And it was in 1728 by the Royal Bank of Scotland. And we were very proud when it came that on 5th of January 2019, the first contextual overdraft was done on a mobile money platform on M-Pesa in Kenya. And today, that system has done over $10 billion with an NPL of below 0.4% in terms of it. So just to what George was talking about, the ability to use data to create propositions is amazing. When we look at M-Pesa, and that's one thing, we've moved from driving financial inclusion to driving financial health. In most of our markets, financial inclusion has moved from 23% to well over 80%. But financial health has not moved. It's still below 20%. And financial health is the ability to provide savings, insurance, wealth management solutions to be able to cushion customers from the shocks that we've seen, for example, COVID. So for M-Pesa, we look at it as a two-sided ecosystem. We look at the business side and we look at the customer side. And then we have this powerful flywheel of our technology that produces the relevant products and services for the both ecosystems. The consumer side is very well known, 51 million customers. You can do anything in most of our markets, from paying government facilities, taxes, merchant payments. International remittance is a big part of our business. It's now $3.5 billion that comes into the M-Pesa ecosystem, e-commerce, and so on. But the more exciting part, actually, is on the business side. Today, we have over 2.6 million businesses that run on M-Pesa. And these are classified about 100,000, what we call the large businesses. These are the Coca-Cola, Diageo of this world. And then what we have, the SMEs. The SMEs are about 500,000 SMEs, and these are the ones who actually power our economy. And then we have what we call the micro SMEs. In the ecosystem, we have been able to identify a sole proprietor who's using what we call peer-to-peer as a business. It's the first time we've ever done it, and now we've created a wallet where my personal account and my business account can be separate. Now we're beginning to bring products and services that actually empower micro SMEs in our ecosystem. Anchored between the two, we've launched two super apps in the last 1 year. What's a business app, and also called the consumer super app, and you'll just be seeing something about that. When COVID started, it was a huge economic and health crisis, but I think it was the biggest accelerant to digital financial services, and we are no exception. I had a difficult choice of whether to launch the consumer app, super app, or the business super app, and I made a decision to launch the business super app because the SMEs and the micro SMEs are the ones who are impacted the most when the businesses close. So we needed to find a way to enable businesses to operate remotely, and we launched the business app. This is the first time a business could see its inflows, outflows, make payments, get working capital, all within the phone. So today I could be here and I'm running 5 restaurants in Kenya. I can see when they checked in, who's on, how much money I've received, what time the waiter walked in, how much tip she has, and so on and so forth. All this is within the business super app. But what's more important is the way the businesses have embraced this has been immense. I mentioned earlier, like in Kenya, there are about 400,000 merchants, over 322,000 have downloaded, and today, over 47% of all merchant transactions are actually happening on the app. This really surprised us about how businesses have actually embraced the technology. So we'll be looking at rolling out more products and services. We've partnered with Huawei and Alipay to make this a super app. So we're having mini apps, and we're opening up the M-Pesa ecosystem to allow third parties and fintechs develop products and services to support businesses. We know there's more innovation out there than within our ecosystem. On our open API platforms, we have over 52,000 developers, and in M-Pesa Africa, we're increasing that. We wanted to have over 300,000 developers within our ecosystem, developing products and services for both businesses as well as consumers. With regard to the business app we launched, the consumer app, we launched it recently. And this is one of the most exciting part of it in terms of the ability to make M-Pesa not only OTT, but actually a lifestyle product. Today, you're able to, with our partnership with Visa, you can connect M-Pesa, and I can go to London and actually pay on the train services while debiting my M-Pesa account. We're looking at providing services such as credit scoring for the entire market in it. So we'll be adding a lot more products and services into this, leveraging in it on the Super App. So just in summary, you'll see this is how we look at it in terms of providing payments, retail, digital services, the mini apps, loyalty, and financial services, all through this one channel. And just I'd like to conclude by just showcasing you a video of how the Super App launch went.
The future of money is simple, like unlocking possibilities with a smile. And having the world in the palm of your hand. It's the ability to touch many lives at the same time and turn your dreams into reality. It's forgetting and still remembering. Simple is having everything that you love in one place. From the ticket to your next meal, to your ticket to the next holiday. It's an easy way to ask for a boost when you're low. And keeping track of everything on the go. The future of money is simple, and it's here. Download the new M-Pesa app today.
Thank you. Thank you very much. Thank you.
Thanks, Achayo, for another superb presentation. We're doing well. Two great presentations today of really, really strong deployments using, I guess, telco data, collaborating and delivering in financial services, first class. So we're now going to move on to our final presentation now. And I'd like to welcome on stage Puneet from Yabex, who I guess will build on the two presentations we've seen and showcase his credit risk scoring solution. Thanks, Puneet.
Not very easy to start where George and Sitoya has left, but while one is delivering a card every 20 seconds and another one is the poster child when it comes to financial inclusion globally. But what I would say is where we start is we would want to replicate it across Africa and in fact more economies like that. So one video which is very close to my heart. Well, I can watch this video over and over again. One reason is definitely the music, but another is I keep watching the people, the faces of the people whose lives we are touching. And how we are doing it is we are using technology as an enabler to cover the last mile of financial inclusion. And isn't that what actually FinTech is supposed to do? Now, good afternoon, everyone. I'm Puneet, and I represent Yabix. We are a FinTech which focuses on how do we collaborate with telecom providers and solve the equation of financial inclusion across continents. We are working in geographies to just set the context. Globally, more than 2 billion people, adult population, do not have access to the most basic financial products, which are credit and savings. And now, talking about Africa specifically, which is core to my presentation and the case study, Malawi, where I'll be talking about, only 2 to 10% of the adult population would actually have a banking account. And forget about the bureau availability, to check. Now, Yabix will focus in these kind of geographies. Yabix will focus on these kind of places and help solve this equation of financial inclusion by creating a financial identity of the people who otherwise are unknown or unseen by these financial institutes. Now, today I'll talk to you about and helping them get into the mainstream. Today, let me talk to you about how do we do it. Now, assessing the credit worthiness of a person without having a formal history is by far the most difficult problem to solve in financial services world. What is interesting to know that the population we just mentioned about, more than 2/3 of them do have a mobile phone in their hand. They do have a communication device on which they are continuously, second by second, minute by minute, leaving what we call a digital footprint. And what Yabix does, which we use this digital footprint and the information which is provided to us by the telco networks to construct what we call a risk profile of these person. The risk profile of the people who are lacking credit history, and creating scores and identities for them, which our financial service providers then use to offer them products. Now, we have been talking a lot about data. So again, any country you go in, there's a basic foundational set of data which we can get access to. It can start from the most basic telco or wallet data, or it can go up to the person being a banked person, having presence in a bureau, having partner data, having utility information and all. Now, while all of them can be distinct, and in countries where we have been working, they don't even relate to each other. So what we do, primarily, we use the most basic of that, which is the telco and the data which is available on the wallets, mobile money wallets on them. And this helps us create engagement around what kind of profile is the person having, what is his usage patterns around his communication, around his products which he has been buying and transacting upon, what has been his CDR, which is the most powerful record which gives an information about a person's presence, about his patterns, about his communication, about where has he been, etc. And we put together all of them, and that's where, and the kind of scale we go in is humongous. Now, if I just talk about Africa, we have credit scored more than 50 million credit-worthy people using this kind of data across countries. And if I move a little beyond Africa, this number is a staggering 100 million. Now, this is across Latin America, this is across Africa, this is across Southeast Asia, the work we have been doing. And that's where I said, we are trying to replicate and enhance what these, what my peers have been doing in their specific markets. Now, easier said than done. What is the secret sauce? What goes behind this is how do we convert this raw data into something we call features? Now, features, something which act as a surrogate for the financial service provider to ascertain the credit worthiness of the person and the ability to give them loan. So, for example, I'll pick one of them, let's say the financial consistency. It's a very simple thing. The way the person has been recharging his account, the number of times he has gone low on balance, the number of times there was a silence between two transactions on his wallet, and the continuous pattern of it gives us a good indication about how consistent is he when it comes to his financial profile. Now, I can go in detail on each one of them, but for the sake of time, let's deep dive into the mobility feature with a use case about this person. Now, what it shows is that how do we use the CDR data and the communication events which are at tagged locations, such as prominent areas on the city or the cell towers, we are able to create travel patterns of the person and correlate it to the closest profession he is in. Now, for this person, if you see during the weekdays, he has been having very random presence across the city or the CBD area. But over the weekend, his trips, his travels were most towards the coastal area. Now, with this data, plus so many other surrogates we had about him, we are closely able to identify that he must be a taxi driver. The kind of transaction, the kind of payments he was accepting with different people of different, routes and all at the time when he was moving from one location to other. So this is just one of the many features which we would use to create the professional, person, what profession he's from. Now, let me talk to you about Chisomo, my favorite person and one of the people who got benefited by our initiative. Oh.
This is Chisomo. She desperately needs to buy fish for her business. Without the fish, she won't have anything to sell to her customers. If she doesn't sell fish, she won't have money for food at home. The problem is, she used all her money to buy the other ingredients necessary for her fried fish business. Now, she needs a small loan. She can't seem to find anyone that can give her a loan urgently. What will she do? She will get an Airtel Money Kuchova loan. She will buy the fish, and her customers will be happy. Her family will be well fed, and she will be a great mother.
Actually, when Sitoe was talking about the lady, I think this is the same lady, but in the Malawi, a country far away, where she would have otherwise had to travel 10 kilometers just to go to a moneylender to get money for her business, and how on a simple mobile wallet, she was able to press. Now, what did she do, really? All she did was trust her telecom network, and we did the rest. Using her profile, her digital footprint on the telco and the mobile wallet, we were able to create surrogates around her financial identity. We were able to create a new segments for these financial service providers which otherwise go unnoticed. We were able to offer a very personalized, unique offer matching her need. Like, this case also, she takes loan in the morning and she would want to pay back within a day. She doesn't need a 15-day or 30-day or a 6-month loan. She needs a loan to buy goods, to do her business and pay back, make money, and again take the loan maybe the next day and accordingly grow. And obviously, servicing and collection innovation by delivering these services at the lowest cost possible using the distribution network of the telcos. Now, what is very interesting is that it's not that, everything is, it's all science-driven. We have been able to prove that scores which are made using alternate data are as good as what traditional bureaus have been doing. And in fact, I'm quite proud to say that in few markets, we have been able to deliver models which are even better than what bureaus would have done using only telco data. The numbers speaks for themselves. This is just a cumulative form of the entire portfolios where we have, and what it shows is that during the pandemic, when the COVID impacted, it didn't, lead. So when you're offering loans, it is just not about identifying who can you give loan to. George represented very well, the propensity models and the credit scoring model, how do they go after? Nobody of you need the loan. But what this graph proves is that the people whom we identified using our models, both the risk and the propensity and the need, really needed that loan, really needed that credit to make a change in their lives. And that's why the cumulative amount of loans only increased, and the overall defaults over a period of time are as low as 3.7. I hear Sitoyo talking about 0.5 or less than 1%. Yes, Fuliza is a brilliant product. We are doing it in some markets, but this is something which is a traditional microloan for a period of 15 days. So I'm not sure we'll speak, Sitoyo, how these models are as compared to what you have done. So to summarize, that's not where we end. We have been doing, so this is a beautiful graph of Malawi. What you see in the red are the main cities, Blantyre and Lilongwe. That's where the hubs of banks are. That's where main customers, banking customers lie. But what you see across the map, the dots, are the loans which were taken using our platform, using our technology. And you can see it has went through the entire length and breadth of the country. This is what this kind of product can do. It is a real messenger of financial inclusion for the world. On the middle, what you see is what Sitoyo also mentioned about the merchants. Now, a lot of these merchants in these countries are using P2P as a method of accepting payments without being registered formally. So using our algorithms, we have been able to identify them and bring them to the mainstream merchant category and offer them credit which can really fulfill their needs. And so on and so forth. I believe there are endless possibilities, and it's just the start. Thank you so much.
Thanks, Vineet, for another super presentation. So we have got some time, so I'd like to welcome our guest onto the stage, and we'll do some questions, if I may. Thank you. Please bear with us. As you know, we need to keep our masks on, and so it's a bit clunky, but that's just what we need to do. So.
No, I want to sit here.
So welcome back. Thank you all for your presentation. George, if I could start with you. I think when you were showing your presentation, a couple of times you mentioned the word collaboration. Two new teams, really big teams, trying to bring them together. How did you create that culture of collaboration?
You know, this is...
Do the other side, George, it might be easier. Yeah.
This is as complex as taking your mask off.
Yeah.
But seriously, usually telecoms, when we're starting to work with the partner banks, they kind of couple of usually two strategies. If you know what you're doing, you're trying to find a small bank, put them in the corner and beat them up and make sure they're doing whatever they're doing. But the problem is very soon you're finding out that they don't have a financial capacities and they cannot grow the business the same way you grow the business. Other alternative, you go to the big bank who has all the financial instruments and capacity, and very fast they're eating you up. So we specifically chose to go with the biggest commercial bank and being the biggest telecom operator and combine those teams together, put them together in one facility, making sure that they have their project masters, people who are leading each stream, clearly define all the streams of activities, and actually joining the forces together. It was not a simple task. From the beginning, people kind of always thinking we're the bank, we are smarter guys. You telco people have no idea what you're talking about. Us, other way around, giving opposite opinion. But at the end of the day, it's a complex project, two very different cultures, two very different organizations. You need to be very carefully following what each organization is doing, but at the end, I guess we succeeded it. One probably secret sauce. Actually, there were a couple of secret sauces, but one of them was, from the beginning, we didn't sign the contract, which is very controversial. We kind of had a gentleman's agreement that this is how we're going to split the profits. And our CEOs shook hands and told us, you know what, guys, we split the profits, bring the money, we'll figure out how to share it, and meanwhile continue working. And it took us a year and a half to prepare the contract. And contract was 700 pages, extremely complex. If we would have started with a contract, it's going to be no starter initiative. Another thing which actually was extremely important for us is the governance. So, though in digital world, people usually think that the digital is very kind of messy and creative. Actually, it's very military style. So we created very structured streams. Streams reports to the Scrum Masters, and once every month, we had a meeting with the CEOs of the company. So actually, two CEOs of the companies were constantly watching what is going on in the streams and constantly escalating and solving the problems. And actually, it went to the extreme that we went to the shareholders when in the cases we were not able to find the solution. So lots of management, lots of hand holding, and understanding the culture is absolutely polarized. So we had to spend lots of effort and attention making it.
Super, thanks, George. I think that clearly comes through in the case study. Without that collaboration, I think clearly you wouldn't have been wouldn't have been successful. Satoru, can I come to you next, if I may? In this morning's session, our very first session this morning was on digital assets. And one of the main messages that came out from the three speakers was that digital currencies are really experiencing strong consumer engagement right across the whole world now. So I just wonder what your thoughts are, what that means for M-Pesa.
No, I think first, it's great to see digital currencies getting mainstream. It's good to see central banks looking at it. The Bank of Nigeria, Central Bank of Nigeria have launched the e-Naira. Central Bank of Kenya launched a paper on central bank digital currency for input. And, you know, M-Pesa is an e-currency. So there's e-money and there's real money in the bank account. So if I have 10 shillings on M-Pesa, there's 10 shillings in a bank account. So, quote unquote, it's actually a stable coin. You can call it that. That's what e-money is. It is digital currency. It's a digital currency before this. And it's just like the way, you know, 15 years ago we launched. It was a fintech before the word fintech was created. And I think with digital currencies, it's the utility of it. So you can have Bitcoin, you can have Ethereum, BNB, Cardano, and so on, Axie Infinity. But I think the ability for each to, for utilization is still a challenge. The ability for it, I think Bitcoin has, 7 transactions per second. We are doing 5,000 transactions per second. The utility functionality, it's good to see what former CEO of Twitter is doing with Block and so on. They're going to have 1 million transactions per second, but it's off the blockchain platform, I think. But I think utility is what's going to make it exciting. Today, and the volatility is an issue, but I think that if you look at what Visa are trying to do with connecting cryptocurrency to the chain, to the Visa railing to make the utility, I think it's something of interest. For us, we're looking at it. We have the utility. We have the two-sided ecosystem. The future, we'll see how the future goes, but it's exciting.
No, I think it's good. And Elsie, you're right to make the point about M-Pesa was the first digital currency, because in the media, that the kind of digital currencies and the telcos just tend to get forgotten. So I think that's a really good point. Puneet, can I ask you about at the end of the kind of presentation and the strength of the presentation is predicated on the strength of the predictiveness of the model. So how do you measure how predictive your modeling capability actually is?
There's something called DAS. So what first is, how much discriminatory power the models are having, and that's what we calculated using the AUC. What the number I showed you on the screen was a AUC of 77 or 0.77, which is in fact amazing. Like normally, anything beyond 0.65 is supposed to be a good discriminatory power. The second A stands for accuracy. Now, so discrimination is basically how good can you discriminate a risky customer from somebody who may not be risky or who is good. So the second comes as accuracy. Now, once the discrimination is done, you have already identified the model and broken them, people across certain deciles, like George mentioned. You see how accurate your models were. So now, in terms of accuracy, normally a difference of 5% is something which should be a good enough, gap between what you predicted and what the actual thing is. And the third thing, S, is stability. Now, that's what you calculate by a term called PSI, like the Population Stability Index. Like over a period of time, how much of your model remains stable, or do you need to keep changing it based on the upcoming new streams of data which are coming? So across these 3 parameters is what we measure our thing. But overall, the portfolio level, if you talk of a business sense, the graphs which you saw towards the end, which shows how much is the default happening on a portfolio, is on a business side, that is the most critical element, because that's where money is. Thank you.
Super, thanks, Puneet. George, can I come back to your project again? How did you actually prioritize where to start? I mean, in these big organizations, there's very senior executives, they have their own perspectives on what needs to be done first. So how did you figure out what project or what proposition to build first?
It comes comes back to the same story about the data, what actually customer need. And for us, we tried lots of things. We tried different models. We tried different models of working with financial institutions. We tried and issue our own financial instruments. We tried using telephone as a bank account. We used lots of instruments. We actually went to ridiculous things trying to understand the customer needs. We put a chip, kind of built-in chip. Let's say I have a built-in chip in my hand. We actually even went this direction, trying to find whatever going to actually work. And let's say example of built-in chip with NFC technology, it's great stuff. Really impressive in your fancy bar, trying to impress people, and you pay with your hand. It's really, but it makes absolutely no commercial sense. So we did lots of experiments. We killed very many hypotheses. It was actually more stuff to kill versus what actually we brought to the market, and we clearly saw what works specifically in the market. We, for example, understood that transactional business doesn't work for us, because it's not our forte, but in the same time building a proper microcredit or credit instruments using data analytics, which really differentiates us, and it does work. So we killed lots of stuff, and we killed more than actually it's in the market right now.
No, I think the focus on the credit score really came through. Sito, can I come to you? Let's say we were sat here in 5 years' time, and you've put your kind of your slides or your vision. So if it's 5 years' time, what would you be, if you were looking back, what would the highlights, what would you want the highlights to be?
I think first where we started was driving financial inclusion, as I mentioned. So those 23%, now it's above 80%. For me, 2027, it'll be financial health, not financial inclusion. And I think if we can move from the 20% of financial inclusion to about 50% in terms of financial health products, then that I'll consider it as a success. I think from the business side, it's to have between 7 to 10 million businesses and SMEs actually all digitized and actually using mobile money products regardless of who the provider is. And I think that will leapfrog in terms of the products and services that we can offer them.
No, that's fantastic. So I think we'll leave it there. We need to keep to strict time today because we've got so many sessions. So I'd like to extend my thanks to Sito, Penny, and George for sharing some fantastic case studies today. Really insightful, super presentations. Very grateful for them taking the time out to join us today.